But I wanted to talk to Richard. 5 insurance mistakes consumers make.
Right.
You know, we talked about this a little bit in the break. People have misconceptions, I think, about homeowners insurance a lot. One of those is insuring a home for its real estate value instead of for the cost of rebuilding. Pretty common. You run into that a lot, right?
Yeah, we get calls on that quite a bit because people are always looking for ways to lower their insurance bill, and that's understandable. But in the end, what you have to remember is that the job of insurance is to make you whole again after you've suffered a loss. So if your house burns down, then we need to be able to rebuild that house for you like it was before. And we get calls all the time from people who say, well, you know, I only have a $75,000 mortgage, so I only want to insure the house for $75,000. Well, that really doesn't do you any good, because if your house burns down, it'll pay off your mortgage, but you're not.
What about your equity?
You're not going to have a house to live in, and all your equity is going to be gone, and then we're probably going to wind up hearing from your lawyer.
What are other ways people can, in terms of you know, and again, the insurance, the lenders look at that too, because they need to make sure that there's policies in place, and if not, they'll enact their own policy on you, right?
Absolutely, they will. Yeah.
So a better way to save, probably raising the deductible, right? If they're financially capable, comfortable with doing that.
Sure, that's one of the things that we can look at, is raising the deductible. It doesn't hurt, and you've heard me preach this on the show many times, to review your policy. Review that policy every single year, because things do change out there in the market, and a lot of times by making a phone call to your agent, you know, something might have changed on your agent's side, where he's got a new company that that he's working with who's giving good rates. They can review the replacement value of your house, because you know, maybe it was valued in 2006 when construction costs were high, and houses were going for a premium at that time, and now construction costs have gone down, and they can reevaluate that. So that's another thing you can do.
What's the risk of a consumer selecting an insurance company by price alone? I think this is probably a risk in any type of service-related business.
Absolutely.
Buying a price alone.
Yeah. Well, there's a lot of companies that have come into the state of Florida since 2005, since the bad hurricane seasons back then. And, you know, a lot of times they come into the state and they offer great prices for a year or two, and then after that they're gone. So you can find yourself out there in the insurance market again, looking around because you went with a company who was just offering a good price and nothing else. Yeah, they're just kind of a fly-by-night type company. There are some good companies that do offer good prices. They might not be the rock bottom lowest price, but you have to look at other factors.
You get what you pay for.
Yeah, some of these companies have been in the state of Florida writing homeowners insurance since the 1970s, so you know they're not going anywhere.
What about the risk of people dropping flood insurance? We hear about that a lot because people really look at it, but you know, what would you tell someone that calls you and says, you know, I've got this $500,000 home in this waterfront neighborhood, and Richard, I want to drop my flood insurance?
Well, and the big misconception there is that you don't necessarily have to live on a lake or live close to the ocean to be in a flood zone. There's, I mean, everybody in Florida lives in a flood zone. Some are just a lot more active than others.
It's just how big the storm is.
Absolutely, and a lot of it doesn't have to do with lakes and rivers and ponds and things like that. You know, a lot of it just has to do with the way the land is in your area. I can tell you some areas in Lakeland that are very prone to flooding. I can tell you some areas in Orlando that are very prone to flooding, and they don't have anything to do with rivers, lakes, and oceans. So just keep that into consideration. You know, you don't necessarily have to live next to the ocean to have to worry about flooding.
That's very true. And again, just like we saw with Katrina, there were lots of people that were not in FEMA required flood zones that lost their home, lost everything. You know?
The premium, you know, what we've seen too is the premiums. If you're not in a flood zone and you want to carry flood as a supplement, it's cheap. You know, and the only time your mortgage company is going to require that you actually have it is if you're in a flood zone. You know, in a flood zone, I'm fairly certain. I think it's, you know, a flood zone is determined if there's a 1% chance of flooding, meaning once out of every 100 years that area can flood equals a flood zone. So, you know, if you're not in a flood zone, then there's a good chance you're not going to have a flood, but then again, there's other, you know,
other things to consider.
Yeah, other things that
because you could have the big one.
You got pipe, you know, the bursting, you know, water rising in your home that are not related to flood. There's things that can happen that would benefit you.
What about renter's insurance? A lot of people are debating, a lot of renters, and I think the real estate market has created more renters, with what's happened. So, what would you tell someone thinking about, whether or not they should get a renter's insurance policy?
Well, again, going along the same lines, renter's insurance is so inexpensive. The average renter's insurance policy that we sell is somewhere in the neighborhood of $140, $150 a year.
For a lot of belongings that they have, and that's
Right.
really what they're insuring. They're insuring someone taking their stuff.
Yeah, absolutely. Well, taking or burning or water damage or anything like that. And, people think, well, what are the chances? And unfortunately, we're dealing with a situation right now with a very bad situation where a house caught on fire, and the person that was in that house was offered a renter's policy, and they chose not to take it, and now they have no coverage for all of their belongings. So it can happen. And for the price that it's available to you at, it's really kind of a no-brainer.